Stocks trade in a narrow range after US equities gain on renewed buying in tech stocks. Metals, financials and industrials notched some gains, while FMCG and IT are the big drags.
Following advice from the Ministry of Coal to list subsidiaries Mahanadi Coalfields and Southeastern Coalfields, Coal India's board has given its in-principle approval to the listings. The news lifts the stock.
RBI calms the bond market with a liquidity bazooka of 2 lakh crore rupees of bond purchases via open market operations in 4 tranches. It also announces a $10 billion rupee swap. Experts welcome the move and see the yields tempering.
Gold scores its 51st high of 2025, stamping $4,500 an ounce and clocking its largest annual gain since 1979. Silver too surges past $72 per ounce to a new high, and platinum records a new all-time high over $2,385.
And in a departure from the earlier pure lottery system, the US will issue H-1B visas based on a weighted lottery method that prioritizes qualified and higher income applicants starting the 27th of February next year. Analysts, though, see limited impact of this move on Indian IT stocks.
Hello and welcome to Business Lunch, live from the CNBC-TV18 Motilal Oswal studio. I'm Arundhati Ramnan, and with me as always, Hormaz Patakia. Hormaz, I mean, the markets today coming off their highs, right? Not doing too much. The mid-cap now going between the red and the green. Not looking like too much today for the markets.
It almost feels like a repeat telecast from yesterday's episode, right? Because it's almost the same range-bound trade that you're seeing on the index. And unsurprisingly so, you're going into a holiday, you're heading into a weekend now. The year is drawing to a close. The new year is on the cusp. So participation is lower, volumes are lower. Of course, there is a lot of stock-specific activity, but the index remains in a very narrow range, and that 26,200 still continues to remain a bit of a barrier for the index. The only positive, if there is that, the fact that we crossed yesterday's intraday high in today's session, only just, but could not sustain above it, just like yesterday's session. So that is the only bit that we have made a higher high on the chart. Other than that, of course, there are no other major takeaways. The banking index has now come off the highs of the day. The IT index continues to drag. It's yo-yoing between gains and losses. There is recovery, but those recoveries are getting sold into as well. So as of now, it's a range-bound session. It's the Sensex monthly expiry as well. So there may not be a lot to play for in the last couple of hours, but you may see some moves on either side if there are any.
Absolutely. So range-bound session today. And if you take a look at that advance decline ratio as well, right, it's still in favor of the advances, but those lines are very close to merging now. And of course, if you take a look at all those sectors, take a look at those lines, they're almost merging. But if we look at the sectors, a rally in metal prices has helped that metal index continue to lead from the front. Hindustan Zinc is up 3% and has now gained in 10 out of the last 12 trading sessions. A rally in copper prices has helped Hindustan Copper soar over 6%. Other metal names also doing well. Nalco, Vedanta, Hindalco, all of them in the green. Obviously, gold prices hitting new highs has also helped stocks like Muthoot Finance and Shriram Finance rally. Muthoot Finance is clocking its best year yet and is one of the top Nifty gainers. On the flip side, though, those IT names continue to be a drag, all of them in the red. Obviously, an overall in the H-1B visa process is weighing on these stocks. Coforge, Emphasis, Infosys, all of them in the red, as you can see on your screen. The pharma index also losing steam. Sun Pharma, Gland Pharma and Glenmark Pharma, all of them over 1% in trade in the red.
As you mentioned, right, IT, that continues to remain that big talking point. Of course, the stocks have not seen a very major reaction, but they are sulking nonetheless. And that is after the Department of Homeland Security in the US last night announced major changes to the H-1B program, replacing the long-standing random lottery system with a weighted selection process. Rima is here to break that down for us and the potential impact on these stocks.
So indeed, there is a big change to the H-1B selection process, but the business impact on Indian IT is going to be very, very minimal. So first, let's get to the news. Now, earlier, the H-1B visa selection worked on pure random lottery. So whether you are an entry-level worker or a highly specialized engineer, your chances of getting H-1B visa was the same. But because there were far more applicants or applications for the entry-level workforce, they just got a disproportionately large share of H-1B visa. This, according to the US, was an abuse and resulted in low wage import. So now they're planning to change it. So instead of the random lottery system, they are moving towards a weighted system of selection where the weight will be assigned based on your wages and your skill. It basically means that higher your wage, higher the skill, higher the probability of you getting an H-1B visa. So this is negative news, especially at the entry level. US wants to encourage getting in only specialized workers and use the H-1B quota for them. Now coming to the impact on the Indian IT companies. For the last many years, Indian IT companies have been reducing the dependence on H-1B visa. And this started during the Trump term one, where rejection rates went up, processing, documentation, all of that became very tedious. So as of now, based on the Q2 numbers, when we spoke to the management, TCS said that, about 500 employees traveled on H-1B. Infosys said minority, that's the number. HCL Tech, a few hundred. Wipro said 250 H-1B visas were sponsored over the last 5 years. Tech Mahindra said less than 1% of the global workforce is on H-1B. So the business impact, as I said, on Indian IT companies is very manageable. But at a broad level, this reform is tough on the low-skill, low-pay roles.
All right, Rima, many thanks for those details. Earlier, we spoke to Kumar Rakesh, India analyst, auto and IT at BNP Paribas, on the impact of H-1B visa on Indian IT sector. Take a look.
This change in selection process, although it dramatically changes the entire selection process, the impact would not be material. So net actually for the entire industry, we do not expect much of the impact. There are strong contingencies available. There is increased local hiring as well. A lot of these companies have done since 2017, and that will also pick up pace in the coming year. Investors have already started turning positive on IT. In the last few weeks, we have started seeing global investors also starting to look at IT services in a more sanguine way. And hence the setup from valuation perspective, under position in the sector for both domestic and foreign institutional investors, all of that suggests that it is a good setup for the sector. Add to that favorable macro data, which does indicate that sector should continue to outperform at least in the near term. Among the large caps, we like Infosys, first for their growth, but also their capability that they are building on the GenAI side in-house and strong partnerships that they have built. We like Infosys for that. Mid caps, we like Persistent Systems, strong execution, but more importantly, that is one company where we are already seeing benefits of GenAI reflecting in their revenue.
Now, we also had a conversation with Sandeep Gogia, the MD and sector lead of tech and digital at Equirus Capital, for more on this subject.
I don't think it'll have a kind of a very large kind of impact, and I'll stick to that minimal that you also heard earlier. So look, what will happen is that a lot of these companies will start hiring locally, right, rather than kind of using this route to send people outside. And second, I see a lot of work getting offshored, right? So I think with a mix of these two, I also believe that the impact won't be kind of a meaningful or a material impact on the margins for the whole industry. I don't think it'll have a meaningful impact on either of those two set of organizations, right? Because the mid cap, let's say, is now still about billions of dollars of revenue, right? They're meaningfully large organizations now, and given their scale, I think they have the flexibility to kind of manage this successfully with little or no impact.
The Reserve Bank of India has unveiled a fresh set of liquidity measures for the banking system. The central bank has announced large-scale government bond purchases and a foreign exchange swap. The RBI will conduct open market operation purchases of government securities worth 2 lakh crore rupees in 4 tranches of 50,000 crore rupees each. In addition, the RBI will carry out a dollar-rupee buy-sell swap auction of $10 billion within a 3-year tenor. These measures, which come after liquidity in the banking system slipped into deficit following sizable outflows linked to advanced tax and GST payments, are expected to inject nearly 3 lakh crore rupees into the system. Earlier, we spoke to Lakshmi Iyer of Bajaj Alternate Investment Management and Dhaval Dalal of Edelweiss AMC for more on this. Take a look.
This is a good and a very positive move, much intended to bring some cooling off on the yields. You could see yields receding towards the 6.5% region, but incrementally, will banks continue to support? See, they've been tendering in OMOs. Have they been really buying in auctions? I think all of that will set the narrative for it to decisively breach the 6.5 level on the lower side and stay there. So I think there are going to be multiple, and our view is that this may not be the last of the measures. So I think bond yields are going to be in check, maybe closer to 645, 6.5 lower end, higher end of 665. I think the lid for the bond yields have been done for now.
Despite RBI pumping so much of liquidity in the last month, I think the bond yields continue to trend higher, presumably because the Reserve Bank of India did not announce any OMO for the January. And I think also the higher than expected SDL auction, I think that was these are the two triggers which pushed the bond yields higher in the first in Monday. And Tuesday as well. So I think in response to that, the Reserve Bank of India has come out with a very big bazooka OMO bond purchase and a $10 billion swap. I believe that this should calm down some of the nerves in the bond market who has been asking for more and more.
Now, Coal India is the other one. The stock continues to do well. It is the sixth straight day of gains for the stock. It's turned positive on a year-to-date basis and although slightly off the highs of the day, though. But Vivek is here to tell us what is causing this outperformance in the recent past. Vivek.
Well, you know what's essentially causing the outperformance. Remember, it was the top Nifty gainer yesterday. Is the fact that the street now expects significant value unlocking to emerge as the company goes ahead and splits all of its verticals into separate listed entities. So what's exactly transpired last evening? The company has received the board approval for listing both Mahanadi Coalfields as well as Southeastern Coalfields. Together, both of them account for a little over 52% of Coal India's production. Remember, they have already initiated the listing process for two other arms, which is Bharat Coking Coal as well as Central Mine as well as Development Institute. Now, on December 16, the Coal Ministry had asked the company to take steps for the listing of the two subsidiaries, and yesterday the board gave the in-principle approval. Now, going forward, what is the way? Number one, MCL as well as SECL will now communicate to the Coal Ministry for submission to DIPAM, and the listing of these subsidiaries will be subject to regulatory approvals.
All right, Vivek, many thanks for those details. On that note, it is time for us to head into a short break. More news and updates on the other side. Stay tuned.
Welcome back. The markets have moved into the red now. The Nifty is now below the flat line, but there are a lot of other movers that have been in the news over the last few minutes. Castrol is one of them. And after the announcement of the parent company selling majority stake to BP selling majority stake in its parent, the stock was up almost 8.5–9% at one point. It's off those highs, still holding on to gains of around 4.5%. It'll be interesting to see what happens now for Castrol India after this deal announcement. And a lot of these commodity-related names, as Arundhati was highlighting at the start of the show as well, they continue to do well. Manappuram is up 6%, Hindustan Copper is up 5.5%. And most of the other commodity-related plays too continue to do well in today's session. Just pull up Bharat Dynamics before we move on. That stock is at the highest point of the day, and that's after the successful testing of the Akash missile systems earlier in the day. So 4% higher for Bharat Dynamics as well. Shifting focus now to the US. The economy grew at its fastest pace in 2 years in the third quarter. Of course, that was a delayed data. It was fueled by robust consumer spending and a sharp rebound in exports. The GDP at 4.3% annualized rate, the fastest since the July to September quarter of 2023. The stronger than expected increase in the GDP also reflected continued investment by businesses in equipment and AI. Now, government spending, mostly on defense, also provided a lift.
Moving on, following the expansion of the US GDP at 4.2% as opposed to the predicted 2.5%, US President Donald Trump tweeted that he wants the next chairman of the Federal Reserve to lower interest rates if the markets are doing well. He even mentions that inflation will take care of itself, and if it doesn't, they can always raise rates at the appropriate time. He even added that if anybody who disagrees with him will never be the Fed chairman.
Now, next year will mark the 30th anniversary of former Fed Chair Alan Greenspan's call to keep the rates steady, correctly predicting tech investments will lead to higher productivity. Now, the current and future Fed chairs will have to make a similar decision to assess what impact the AI investment boom has on setting rates. CNBC's Steve Leisman is here with more details.
2026 will mark 3 decades since Fed Chair Alan Greenspan made one of the most important and toughest calls of his 17-year career. His colleagues wanted to raise rates, but he decided all of the investment in technology back in 1996 meant he could run the economy hot with higher growth and little fear of inflation. Among his colleagues, Janet Yellen, who would go on to become the chair of the Federal Reserve, and Alan Blinder, who urged Greenspan to hike rates. But Greenspan, he was right. Inflation plunged, and he held the line on rates for 3 years. Fast forward 30 years, and the current Fed chair and the next one face a similar call. Will the AI investment surge create a productivity boom that means lower rates for longer and stronger growth without inflation? New York Fed President John Williams said last week it's already informing his view of monetary policy.
What we've been seeing, which is actually very good productivity growth over the past few years, around 2% or so. So that's already happening, and I think that's going to continue for some time. I don't have a crystal ball that tells me what productivity will be, but if the AI boom does turn into a sustained period of productivity growth in the U.S., then I think those are the kind of fact or kind of developments we would expect.
There are risks. The administration's immigration policy means the labor force may be closer to full employment and potentially closer to generating inflation in a hot economy. Tariffs and higher inflation already raise the risk that growth could run too hot. And most important, as former Fed Vice Chair Rich Clarida points out, Greenspan eventually had to ratchet rates up. He said in a recent blog, productivity growth raises supply and thus tends to lower inflation pressure. It also encourages demand through higher investment and the wealth effect from booming stock markets on consumption. And that is ultimately the Fed's job. Don't stop the punch from being served, but take away the punch bowl before things get out of hand.
Meanwhile, President Trump's administration said it will impose additional tariffs on Chinese semiconductor imports, but will delay the action until June 2027. CNBC's Elaine Yu has the details.
The Trump administration has decided to impose additional tariffs on Chinese chip imports, but not until June of 2027. And it'll be at a rate that's determined at least 1 month in advance. This is on top of the existing 50% that is already in place for Chinese chip imports. So the White House is upping the ante, but they're delaying it in light of the trade truce where both sides, the U.S. and China, have suspended various tit-for-tat measures. And why are they doing this now? The U.S. Trade Representative Office has accused China of unfair trade practices in the chip industry. That's after an investigation that started last year during the Biden administration that's focusing on older so-called legacy chips from China. And they're saying that for decades, China has targeted the chip industry for dominance, calling it increasingly aggressive and sweeping non-market policies. And they're saying that if the fact that they're targeting chips for dominance is, quote, unreasonable and severely disadvantaged U.S. companies, workers, and the U.S. economy, and is also creating economic security risks from dependencies and vulnerabilities. So they're injecting new friction in this ongoing U.S.-China trade saga, but also parking it for now. But we've also heard from the Chinese embassy in Washington, which is accusing the U.S. of politicizing and weaponizing trade and tech issues, saying that it will destabilize global industrial supply chains and that it will benefit no one. And they also said they will take all necessary measures to safeguard their rights. So they are taking aim, and this means investors could be braced for fresh uncertainties around U.S.-China trade ties in the coming year.
On that note, it is time for us to head into a short break, but more news and updates on the other side. Stay tuned. Welcome back. You're still with us on Business Lunch. In yet another achievement for India's space research, India's heaviest launch vehicle, LVM-3, Bahubali, has successfully carried a massive 6.1-ton satellite to space. The mission carries the Bluebird Block 2 spacecraft of US-based AST Space Mobile. This was the 6th operational flight of the LVM-3 launch vehicle. But Harmaz, the market's now firmly in the red as we speak. The mid-cap and the banks about 0.1% in the red. Nifty and Sensex flat.
When your biggest constituents are not doing well, that's the kind of move that you see, right? Reliance has now moved to the lowest point of the day. And for a better part of this up move that you saw on the index past 26,000, Reliance was a big contributor to that. And it has come off significantly from the highs of the day. Also, look at the contributors list. You will also find a lot of these large private financials. We were speaking about this at the start of the week, that these private financials have not managed to put their hand up whatsoever in ensuring that the Nifty moves higher. ICICI Bank still among the big drags on the index today, along with Sun Pharma. Infosys, of course, par for the course, considering the reaction you're seeing in IT stocks. But look at Bharti Airtel on the flip side, continuing to hold the index higher, along with a lot of these auto names like Mahindra & Mahindra and Maruti Suzuki. Hindalco still in the green. Aluminum prices are now at the highest level since 2022. And with this move today, Hindalco has taken its year-to-date advance to around 50%. So that's done well for itself. That too has come off the highs though, but still managing to hold on to some green. And just pull up Muthoot Finance before we wrap the show. That stock too is at record high levels. It's up almost 80% now in 2025, and that has made it the biggest calendar year return the stock has had since its listing in 2011. Take a leave on this edition of Business Lunch. Arundhati and I wish you a Merry Christmas and a happy holiday tomorrow. Mid-cap radar on the other side though. Don't go away. We have a lot to catch up on.